Welcome to Conversations with My Real Friends. I'm Jennifer. I'm here with my friend Robert Feldman. Robert is an insurance agent, and in this video we're going to be talking about a homeowner deciding, say I bought my first home.
Yep.
And now 10 years later I'm ready to upgrade, but I want to become an investor. I want to take that first home and turn it into a rental and then go buy my new home.
Absolutely.
Do I need to do anything with my insurance?
Absolutely. This is one of the scariest moments that I work with a lot of our real estate friends that are doing the listings or property managers. Mm-hmm. And what really is scary is there's a big difference between a primary residence, a secondary residence that has occasional rental,
right,
and a full-time rental.
Yeah.
It's three different worlds, three different policies. And what's really happens a lot is a lot of consumers, it's the last thing consumers think about.
Right.
They're dealing with, obviously property managers doing all the things, and they believe that their homeowner's policy covers them if they rent it out. The answer is no. And the scary part is not so much as the structure, but the liability coverage is where it really gets dangerous. We've seen numerous times over the years where people have failed to inform the insurance companies.
Right.
Insurance companies deny claim.
Yeah.
They're going to pull back.
Correct.
It's an exclusion for rental. So it's clear. I'm sorry it's in the small print for those that are out there, but it is in the small print. But it's again the information of really getting out there. What consumers have really started to get to is they believe that they can't really talk to their agents anymore. And we appoint agents across California. We get this feedback all the time. Is because they believe that consumers believe that if they tell them something, they're going to be canceled or they're going to have problems. And the problem that you really run into is that's dangerous.
Right.
Because I don't care. It's better to be canceled and know about it up front than to find out you don't have coverage.
Correct. Right. The risk from an insurance standpoint of insuring a rental is different.
Yes.
Right? I mean, that's the real world.
It costs more money for landlord policies than a regular policy.
And so that's not a surprise that it's an exclusion.
Yes.
And so it makes sense that in that situation, if you're not being clear with your insurance company, you're gonna be the one who's out, not the insurance company.
The insurance company in the past there was a lot of I would almost make an argument like well, kinda, we'll see, maybe. Is your experience obviously defending, you're seeing insurance companies are losing money in more than they've ever done in California, really the Western United States.
Yes.
So as companies lose money, they make adjustments and rules become a lot firmer.
Right.
And they take the gray out of areas.
Correct. And the language is cleaner in the policies than it used to be, right?
It's a lot cleaner now.
Because they need to avoid these risks. Because they have to set their rates based upon risk.
Yep, that's it.
Right? So I know we like to think of, as a public, we claim, we're worried about the big bad insurance companies, but the reality is that they're businesses.
That's it.
And it has to the math has to work for them too.
It has to. And that's the thing I think a lot of consumers, I deal with consumers from time to time that are like, well, insurance companies should just pay. Okay, so what happens is when a claim is, really what insurance is, if you think about it by definition, it's a gathering of risks to spread risks across and money so you can collect premium. It's a business to pay out and be able to make a return.
Yep.
That's what insurance is. And so when insurance companies believe a risk is potentially a $10,000 risk, but they pay $100,000 in claims, that's how we get higher rates.
Right.
That's the biggest thing people are upset about in California is watching the things go. Right now, that's what's causing it.
Well, and we just went through the fires a few years ago here in Malibu near us, and a lot of the claims were smoke damage and things like that. And so the insurance companies have had to adjust policies to deal with that.
Exactly. Where right now it is considered still primary, first line. Things that we built with the WOWs insurance programs are taking that in consideration. And we're going to reverse the trend of it. That's why the brokers across California have been appointed, are thrilled for the program. Right now we have real estate professionals. When I speak later today, I'll be speaking at a conference with realtors and a couple hundred realtors, and they're thrilled to hear about the changes in concepts because bottom line, change needs to happen.
Right. So if someone needs help figuring out getting a new policy, managing their risk, how do they reach you?
You can obviously reach out to your broker, but if you're not getting the right answers, please, you can email me, Robert@WOWs Insurance, WOWS insurance.com, or you can always go online and just type in WOWs Insurance and find us. Either way.
Great. Thank you for joining me. And thank you for joining us for this episode. We'll see you soon.
soon.